In this video, traders, we're going to talk about knowing when to trade or not is a superpower. Stay tuned. Hey guys, welcome to you. Thank you for joining me. All right, so yes, the title is a little bit in jest. There's no real superpower in trading. Sorry guys, if you're kind of new here and you thought that was going to help you out. Those of you who are the old guard who have been here a while, you know that I'm messing around with this title. But in a way, I'm not, because actually knowing when to put your capital at risk is one of the key attributes of traders who are consistent and who are doing the things right, and the difference between traders who are kind of spinning the wheels and not getting the grip they want because they're trading in environments and in markets that are not conducive to their strategy, or they're using the wrong strategy in the wrong environment. They're putting their hard-earned capital at risk when, you know, there is no real edge there. And that's a good kind of marker at the very beginning, before you even look at your strategy, before you even kind of decide how to trade, anything else. It's like, what conditions do I need before I decide, or you decide, to put your hard-earned capital at risk in the markets? What needs to happen? You know, this is when you're taking control of your trading. You're not being dictated to by the market. You're saying, hey, these are my rules. This is what I demand to see before I'm even prepared to risk a penny of capital. And then when those filters are kind of passed through, then you start to look for your setups and strategies. Then you start to go, right, okay, we're in the conditions that actually mean I can put some money at risk. Step forward one marker. Right, now what are the conditions required for this setup? What strategy I'm looking for? What price action move am I looking for? Kind of before all of that, just saying, am I even going to bother looking at the market today? Because think guys, if you want to separate yourself from everybody else out there, and we know that the majority of people are losing money, the numbers are different wherever you listen to, but we know that most people are losing money in this game. And most people are trading regularly. They're trading too much. They're over trading, they're trading in times. And if you look at the P&L, if you're kind of struggling yourself at the moment, you're on that journey to profitability, you know yourself that there are days when you're trading you shouldn't have traded. There are trades that you've taken that you shouldn't have taken. And of course, that's still going to happen. But if you can reduce those dramatically, you are on a much better course than the rest of the people. So things like, okay, a little checklist. You go, right, you know, what's the volatility? Okay, what's the volatility like? You know, how much movement am I getting? In other words, do I need to look at the opening overnight range if I'm trading the indices? Do I need to look at the Asian session on the forex pair that I'm looking at? Do I need to look at maybe the total range on the week? You know, so range as well is another good one as volatility. It's basically a similar function. Maybe you need to see volume if you're trading stocks. You want to see, okay, how much volume is being done. We talk a little about relative volume as well. What about price position, right? There's no point in trading a breakout strategy if the market is kind of been stuck in this multi-month range. There's no point in really taking that breakout there. That's not really got any weight behind it. And if that's your strategy and the way you'd like to trade, then until the conditions match, i.e. we are here or we are here, then you're not even going to get involved in the market. So again, it could be price position, a price pattern. Hey, I only want to get involved when we are in an uptrend. I only want to get involved when this triangle has resolved itself, when this rectangle has resolved itself. I only want to get involved when we've got a significant gap. You know, if you're trading an index, that might be the cash gap. If you're trading a stock, it might be a stock gap. I might only want to get involved when there's a significant catalyst. Something that really allows you to get involved. Now, okay, the more active you are, the looser these are going to be. But they're still going to be there. You know, you might say, hey, I'm a day trader of the DAX, I'm a day trader of the Dow, NASDAQ, or whatever. And if the range doesn't meet your requirements in the first 15 minutes, you shut off your screens and you walk away, because you know that you're likely to get yourself into trouble if the daily range is low, and a precursor or a kind of a hint, if you like, as to the daily range is going to be the first hourly range or the first 15-minute range. And if that's low, then you say to yourself, hey, you know what? The day's going to be quiet. It's been a quiet open. I'm not expecting anything. Click, shut down, walk away, and come back tomorrow. And that's the professional approach to things. So, you know, even if you're on that level, there's still some point we have a big broad filter that says, hey, this is when I'm allowed to even look at the market for a trade, let alone actually take a trade. You know, too many traders, and guys, I put myself into this camp years ago, so eager to trade. We're trading too much. we're trading all these movements and this and that and the other, and we're thinking that's the best thing because we think that if we trade more we make more money. And that's, you know, logic, it makes logical sense, but we forget the other counter argument to that is if we trade under conditions that aren't quite right and we lose money, we undo all the hard work. So protect what you've got, be strict about when you're getting involved, have a primary big kind of filter that says, right, the only time I will unlock this door and walk into this risk arena, which I'll then select different strategies, is when these conditions are met. They're going to be personal to you, but some ideas to look for: volatility, the range, the volume on the day, the price position, great one on the higher time frame, any gap if you're trading stocks, any catalyst as well if you like that momentum ignition type trade. Anyway, guys, I hope that's helped. I'll know your thoughts in the comment section below, and I appreciate your support, comments, shares, likes, etc. Take care. I'll see you in the next one. Bye bye.